Okay, on this particular segment, let me cover the RVX, which is the Russell 2000 Fear Index, the VIX, the USD Japanese Yen, um, the USD Japanese Yen chart, aka the carry trade index, and show you the situation of the euro, and a couple of other proxies that we use to measure the directional bet on the market. So here's the RVX, and if we took a quick look, without getting too complicated, here on the daily and the 1 hour chart, we can clearly see we got a head and shoulders pattern going on. And it's pretty simple to understand that these bars are showing that it wants to get back towards about 1655, possibly test this level. From this level, it can either break down and get down to some very ugly levels around 15.7 or 15.5 on the RVX. That means the Russell 2000 is going to go hit 1180 real fast, or more. But we have yet to see. But this is not a very constructive pattern. It looks like the RVX wants to go down, which is inversely correlated to the Russell 2000, and the IWM wants to go higher. So that's it. So keep a very close eye on this during the day, which I do, and it has served me well. If you want to trade short term, you might want to look at the 15-minute. Again, this is looking pretty disgusting. Looks like we're going to have a strong up day tomorrow, and that doesn't mean that the market's going to open up and just keep on running up. It just doesn't work like that. If you gap open and you have long positions, intraday long positions, take at least 60 or whatever you want to do, partial profits off the table, so you have some cash banked. Go back and trade the market again. Don't be sitting there from the morning thinking, oh, the market's just going to open up and keep running up. Those days are gone. Even if the market opens up, it pulls back a little bit before it springboards up and makes a big move during the day. And that's just the way things are done these days. The algorithmic and the HFT programs do not allow traders to make money that easily. You have to game them. You have to know what they're trying to do, or at least try to estimate what they're trying to do and take one step ahead of them. We've been very successful in doing that, generally speaking, and even then it fools us many times. It happened to me last week when I was short the IWM, took it out for a minor loss. The thing turned around and went up 300% by the next morning. That's just the way it is. Okay, so you can't always catch the beast, but you have to be cognizant about the fact that it's not a linear market. It doesn't just open up or open down big and keep on going down unless we have some cataclysmic event. And that's markets. That's what volatility is all about, and that's what I'm here to help throughout the day through my live Twitter live feed. And I think it helps a lot of traders navigate these markets very well. So keep an eye on it. You have to keep an eye on the futures, on the live Twitter feed, the Clueless 8 live Twitter feed, and of course the chat room and other things, charts and stuff that I post. Star VX basically looks like it wants to go down. Let's take a look at the VIX. On the VIX, look at the 30-minute chart on the VIX. I mean, this looks ugly. Let me look at the 60-minute chart. Actually, let me look at the 30-minute chart because it looks uglier, right? So what is the 30-minute chart telling us? 30-minute chart is telling us that the VIX wants to get down to its 12. It does have some nice support here at these levels where there's a confluence of moving averages, the 34, the 50, and those things couldn't offer a level of support. So the VIX could drop to about 1245. There's a gap here. Maybe it wants to just fill the gap and run from there. It could fill the gap down here and make a run for it, for all I know. Or it comes down, touches the lower Bollinger, and at that point it'll probably try to reverse a bit higher. But if it follows, one second, if it follows this pattern symmetry, then this VIX is destined to go down towards the lower Bollinger of 12. So that's it. So it looks like the market will go up tomorrow and possibly into Wednesday. Wednesdays generally are 80% pullback days. I've repeatedly shown that to be true. So again, keep that in in your trader's almanac, Clueless almanac. So let's move on from. Let's take a look at the Euro US dollar correlation nowadays. 1 second. So the British pound collapsed today thanks to the Scots. I kind of jokingly put up there the Braveheart effect. Braveheart wants to basically come down from the hills and conquer southern England, but hey, you know what? It's a much more complicated story than that. But remember one thing: England is not Iraq. This is not Kurdistan fighting Baghdad. Okay, this is the English versus the Scots. Scots have that northern territories, which also has offshore oil fields. Okay, oil rigs, I should say. So there's money involved. So just giving up on having independent Scotland and trying to do a sharing of the North Sea oil is not an easy task. So just keep that in mind here. Okay, there's a lot of little things that are in play which the average trader, or for that matter most people, have no idea about. So looking at this chart here and the breakdown on the euro, at this point I expect the euro to get down towards this one, there's some very formidable support at this 127 level, and at that point I expect to see it bounce. If it gets down to 121, right there, get on Priceline, book a nice 3-day trip to Vienna and fly out there. Okay, forget trading if it gets down to about $1.20 versus the US dollar. But at this point you're still going to manage to squeak out a normal cup of Starbucks coffee in Vienna, or in Prague, or in Budapest, or wherever you want to go, at $1.27 on the euro. Okay, $1.27 euro, US dollar 1.27 versus the euro. So as you can clearly see, I believe that this is where support comes in. Too much of a dramatic fall in the euro affects the price of real assets in the eurozone, so that's not necessarily very good. I don't have the chart up here of the British pound. Let me see if I can get it up. GBP. I can't seem to get it up. Oh, here I found it. British pound. Yeah, I'm a genius, right? Okay, look at this. So this is very, look at the weekly chart. I mean, this is a waterfall decline. Keep in mind that this was one of the primary factors why our markets were generally weak overall, aside from techs. Very sharp move down from $1.72. The British pound has now collapsed all the way down to $1.60. I mean, this is a free fall here. Okay, so this is the Braveheart effect again, right? So this is something I don't want to get into right now because it's a lot of macroeconomics involved. But I've posted some nice articles on it that you guys can read and understand what's going on. But a quick, rapid devaluation, a random, what's the word? Uncontrolled devaluation, like we're seeing here, is not good. I believe we find support at this level here. That would be extreme at $1.58, or even here at a $1.50, $1.58 or so. Let's put it this way: anytime a currency is in free fall, it's never good for the economy. It's as simple as that. Controlled pullbacks are fine. Uncontrolled waterfall declines are not good. So again, it's not the end of the world. This thing is going to be resolved, and it's going to be resolved peacefully and like civilized gentlemen that the Brits and the Scots are. So again, this obviously shook up some of the credit markets quite a bit, the currency markets. That has a ripple effect in the stock markets. That's why we saw the industrials weaker, and all kinds of stuff. Beneficiary of this whole thing, where our technology companies and our banks were pretty okay today, so not too bad. So let's take a look at the US dollar. The US dollar keeps on getting stronger, primarily because it is the safest currency in the world. The US is the best house in a rotten neighborhood, whether you like to believe it or not. So the bottom line is that I'm looking at a weekly chart here. You can see the dollar probably gets up to about 85. That's been the case many times. And on the low end of the dollar stays around 78. So if we do break out over this, then obviously it's going to be, it's not necessarily that good. There's also the fact that interest rates are going to rise, even though they haven't been rising, because a lot of global money is sitting in U.S. government treasuries and pressuring the yield down. But overall, the U.S. dollar completely breaks out over 85, then it's not necessarily a great thing. We don't want too strong a dollar. It crimps our exports, makes our goods more expensive for foreign consumption, and it eventually hits the bottom line of U.S. corporations, and we don't want that to happen. So I think this is where we get, and then we start to pull back a little bit. That's enough of the macro global economic explanations, theories. the game theory